So guys, I'm giving you today two of my favorite volume profile setups that when you exactly watch out for these setups every day and follow the rules I'm giving you today, it should be no problem to get you on a funded account on any prop firm. So I would say, let's do this. So let's watch out for my two favorite setups. So what we need is very clearly here the volume profile chart, and as always overnight session and regular trading hours. So let's just hop here back to the open of New York session, and what we always doing guys is mark out value area high, okay, and value area low. That's the first thing you need to do for these setups. So right here, value area high, value area low. What you also can do is point out the point of control right in here. So you have here 3 clean levels. So the first thing I'm always doing is to wait and have the patience to wait that the market comes out of a value area. Right now what you can see is that we are middle in value. We are middle in value area high, value area low. So we don't even need to watch the market. What you can do is make an alarm on value area high and value area low, and when the market comes outside you get notified, and then you can come back to the charts. Because guys, it's so important that you don't watch any move that happen on the market. You need your brain to relax, and you only should activating your brain when it's necessary, okay? So when the market comes to a specific level, you should take action, and when the market are not on any level, you shut your brain off and just relax and wait that the market comes to a specific level. All right, so that's very important. So the first setup right here is when the market decides to push outside of value and stays outside of value, then I only need to wait that the market retests this line right here. So I will play here this move out and see where the market is moving. So we can see the market comes up to value area high and decide to breaks back into value area. So this whole zone right here, I'm not interested guys. I said it before, I don't want these little scalps. Now sure, when the market breaks here back down and retests value area high, you definitely could look out for a short guys. I'm rather waiting that the market decides to push out, stays outside of value, comes back, retest, and then the odds are very high that this trade works out. Okay, so let's play this now out. You can see the market crashes to the downward side, test and value area low, and again guys, you can look out for a long, but we are waiting that the market breaks outside. So let's play this now out. We can see that this would be a good risk to reward ratio as well, and would be a good trade as well, because the point of control is all the way up here, so we have room to climb. Okay, but again, we are waiting for the break. So right now in here we have the breakout and the stay above value area high. So now the first setup comes into play. So right now we are just waiting that the market comes here back to value area. So let's play this now out and see if we get this retest right here. So right now we can see that the market testing value area high, and now it comes into play. So now the first setup is valid. Okay, so we break out of value area high. We also have here a little bit of a P-shaped formation, so the odds are better than before. So right here you have this P-shaped formation. Here is low volume and the point of control is all the way up here. So we are as well knowing that the market should look for higher value. We break out from the value area high and we retesting value area high. Now you can look out for your long position. And again guys, I'm always saying this, you should look out for delta or footprint to give you more confidence, but you don't need to. Okay, you only could look for candlesticks, and this is as well a valid setup. Okay, so when the market comes here back and you can see the wicks on the value area high, then you know here's rejection, right? So here are looking buyers to buy this exact level right here. Now the only issue right here what we have is that we have the current point of control from the regular trading hours sitting closely above the market right here. So it's a little bit an issue to jump on a trade, because when the point of control is so near to the market, it means that market could go a little bit sideways. It could go chopped, because the point of control is the fair price. And usually we don't trade fair price, but let's say we jump here in because the setup is still valid, guys. So we jump here in, then the stop loss, we say go underneath this wick right here. So we have about 15 points of a stop loss, and now we are targeting the value area high from the current session. You can catch here a 1-to-1 or a 1-to-5 or whatever, what's your risk to reward rules are. That's your thing. Okay, so let's play this now. We are in the position, we have our take profit, we have our stop, and now we just execute and let this trade run. I am not going to break even until my price target above here is hit, or we are breaking above this high right here, then I'm going to break even. You need to let a little bit of breathing room, alright? Especially when you're scalping, the market needs to breathe. But let's play this now out and see if we get our price target right here. You can see the market just one time frame to the upward side here and hitting our take profit. Now stop loss to break even, and let's say we are shooting for my 1-to-2 risk to reward. So let's play this now out, and we can see we push up and our 1-to-2 risk to reward is hit. Now when this happens, guys, that I'm 2% up on the day, I'm shutting down. Trading is so stressful, and when you are 2% up in 5 minutes, guys, it's not getting any better. You should definitely not risking your profits on the day again, because you don't want that these profits blow up. Okay, so again, guys, that's prop firms, and you need to take profit. And when you have a profitable day, then shut off your computer and go away. So the second setup right here, guys, is a low volume node, and a low volume node, you can clearly see this right in here. This is a good example right here, where no volume is traded right in here. So these tiny volume nodes right here are low volume nodes, and you can mark this out with a zone, and that's your proper zone right in here. So, and I am only looking for low volume nodes on the regular trading hours profile. I'm not looking for low volume nodes on the overnight session. Of course you can do this, but I prefer the low volume nodes on the regular trading hours. Okay, because when I mark this zone right here out, you can see right in here, when I go here back right in here, so you can clearly see that we get some rejection from this zone as well. We come down, we push back up, we break through, come back to this zone, and then we testing 1, 2, 3 times. So you can definitely look out here for a short. Okay, but I'm only looking for low volume nodes on the regular trading hours. So we are here about, guys, 2 hours into the trading session, and what I'm seeing right here is this low volume node all the way up in here. So in these zones, guys, are so important in your trading. When you see a low volume node, you mark it out, and when the market decides to come here back, then you can look out for either a short or a buy. So we marked here out this low volume node. So let's play this now out. So let's decide to go here to the 5 minute. That is going a little bit quicker, because my videos are going always so freaking long. So let's play this a little bit quicker out right here. So now we are retesting this low volume node. So let's jump here back to the 1 minute time frame to get a clearer view right here. Now on low volume nodes, it's so important you get a quick entry. And how you get a quick entry is to look at footprint charts and see that here big orders are stepping into this low volume node. Because when the market decides to hit a low volume node, the market quickly decides to push down, and you get such a bad entry. I've noticed this lately quite a bit on my trading, that when I have not a quick entry, my risk to reward is very screwed. So watch on low volume nodes on delta footprints and you should be good. But now we are testing this low volume node right here. So I'm jumping here in now on the short position, because let's say we seeing some sellers on the footprint. The stop loss goes, let's say, 15 points above this low volume node, and we are targeting a 1 to 2 risk to reward. But let's say we are targeting this value area high right here on the regular trading hours. Right, so now when the market, because this is a little bit of an aggressive entry, so when the market decides here to come here and fill this complete low volume node right here, I'm stacking positions. Okay, so I will jump here in with 0.5% of risk on my trading account, and then I'm stacking positions when the market decides to come here up and fill the complete low volume node right here. But let's play this now out and see where the market is moving. So now we get a little bit of aggression from the sellers right here on this low volume node. So let's play this now further out. So we actually coming back right here and retesting again this low volume node. Now this would be my second position right here, stops as well as the other position, and then the target of the value area high. So we have now in total 1% risk. So let's play this out. And right here we are taking out these two positions. Now that's as well a good example right here, because why is the market so struggling right here to come to the downward side? It is because the point of control is now on this level right here. So the market most often than not chops around on point of control and it's getting really messy. So this could be a little bit of fear right here when you are here into the position, because you don't know, yeah, is it going up, is it going down? But eventually you need to sit through this chop right here, and then the market comes down and takes out your take profit. So these are my two favorite volume profile setups. I love it because it's so easy. You know, it's so freaking easy. You only need to watch out for a low volume node or a break on a retest on a value area. Now let's jump here on TraderWeight that I can show you what I am using, because most of you guys, I think, using TraderWeight. When you want a better delta footprint, I recommend these guys right here. So this platform right here, it's very accurate for volume profile trading or delta footprint or any volume analysis. But I'm thinking again that most of the guys you out there have TraderWeight. So, and how you get this delta footprint is you go here on the indicators tab and you search for delta footprint by market zero. You plot this on and it should exactly look like this. You don't need to tweak any settings. You let it on default, and this is your delta footprint chart right here. And down here we have cumulative delta right here. These are my three screens, and on the right hand side we have the tape that shows me how much volume is traded. So guys, that's all you need to know from today and from my setup. I hope you liked it and enjoyed it. When you do so, then please hit the like button, hit the subscribe button, and I will put my effort in to make more videos like that. So I would say we see us in the next video. Bye.